Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. It's Monday, so you know what that means. It's time to buy some more dividend-paying stocks. What we're looking at right now, this is my taxable stock brokerage account over at M1 Finance. This is my Average Joe Dividends portfolio. And we can see the current balance is now below the 270 mark because the market has been dipping. So we're at 268. 973.19, and this is live, so this will be changing as we go through the video. We can see though over the last year though that we've had a money weighted return of 16.35%, but when you count the dividends in there, it's been just over 21% over a 12-month period. So in this video, I did a $100 deposit, and what I do on Mondays is I use auto invest, and where that $100 goes depends upon my allocations. You can see where I have an actual and a target percentage, and anything below the line, below the target, that is underweighted, and that's where the money's going to go. In this slice, the 12 more dividends, it's right at the 8%, so the money's not going to go there. So we'll see where it goes when we go into the activity log. And so there were two buys here, but let me show you though, I had two dividends roll in over the weekend. The first was from Lockheed Martin at $5.34 and Nvidia for 40 cents, but since the Nvidia dividend is lower than $1, I can't drip that back into Nvidia. I believe it has to be $1 or more to do the buy. So it looks like the first buy is going to be Lockheed Martin with that dividend drip. So I think the $100, yeah, it sure did, went into BST, and that was based upon the allocations within my slices within M1. So $100.40, and remember the 40 cents was from Nvidia, went into BST. So click in here, we'll see what it bought. It bought 2.74617 shares of BST, and for every share bought, I'm adding 25 cents of additional monthly dividend income. We're going to go over that, and I'll show you that. And also with the buy with Lockheed Martin, even though it's going to be a tiny fraction of a share, the 534, it bought 1% of a share, so it bought 0.01099 of a share, but I think it's going to add a penny or two to the next dividend for Lockheed Martin. So let's go on over to my Google Docs spreadsheet, and on this sheet it shows all of my positions that are in the portfolio over at M1. We'll boost that up right there. So it shows the company, the ticker symbol, the share price, using the Google Finance function to pull the price live. And here is the average share price that I've bought into each position. Here's the number of shares I own in each position. Here's the value if I were to sell. Here's the cost basis that I've bought into for each position. Here's my gain or loss in dollars. Let's scroll down to where we're at in December. And then we can see the gain or loss in a percentage. And then here is the dividends that each stock pays per quarter. But I have two monthly pairs in the blue, which are Realty Income and BST. And BST is where I bought the additional shares. And we can see here, here's the next dividend that BST would pay if I did not buy additional shares. So that 502.56 is going to go up, and also the Lockheed Martin next dividend is going to go up. Hopefully it'll probably go up by a penny or two, like I said. But back over here, here is the dividend quarterly and monthly, and then here's the current yield, and then here's the yield on my cost for each position. We can look at BST though. Look at the current yield is over 8%, and then my yield on my cost is higher because I have bought these shares at a lower average rate. You can see 32.70 while the current share price is 36.64. And actually, this investment's done pretty well for me. At the gain or loss at over 27%. It's actually done better than SCHD has at 19.45%. And anything above, I think it's 25%, is going to be in the green. So BST is in the green for me. And then here's the dividends per share. And I believe it was 2.7 shares I bought. So it's going to be a multiplier times that 25 cents each month is going to increase the next dividend. And everything on this sheet, it is arranged by the pay date. So when PNC announces their new dividend, Apple, etc., I'll put that in, and these will be paying again in February. So it just keeps recycling. These investments like AbbVie, once it pays, in November 16th, I got that $43. It doesn't stop paying. It's going to pay me again next 3 months. And then the same with like O and BST. Every month they are paying me more and more dividends. And we'll do a quick count up of the dividends that actually paid. So everything in the dark green, this is for December. And I'm just going to select this so we can see the dividends that have paid so far. And there's a few more I haven't received. And we can see what those are for FNF, Broadcom, Union Pacific, and Traveler. So we're not quite done yet. But I've received a sum of $1,720.76 just from this portfolio alone. And this portfolio is 15% of my total net worth. Let's scroll down here. I'll show you some more things this sheet tracks as well. So you can see what's scheduled to pay me in January. And of course, the 2 monthly payers. Once I get done in December, I'm going to change those dates for O and BST, and they're going to be in the January pairs. We can see down here. So here's the total value of the portfolio live, and then here's my cost basis, and here's my gain or loss. This includes dividends, and then I have an array here for BST and O. Since they're monthly pairs, I have to show them 2 more times to get a total quarterly amount. So I have to add them in 2 more times. That's the 860, and then times 2 to get a total quarterly amount. So then I can come up with the monthly cash flow average as well as the annual here. And these are going to change as I grab some data from M1, and we're just going to paste it into the sheet like I do every time I do a buy. But we're going to see these change, and also the monthly cash flow average is going to change over here for BST. We're going to see that go up as well. And I'm going to write down the 502.56. That is for BST. I'm just going to hard code that so you can see how that's going to change. And we're going to go back to, there we go, back to M1. We're going to go to the Holdings tab, and we're going to pull that data over here, starting with the name column. Grab everything. We're going to do a quick paste over on the other sheet here. Go to the M1 data tab. And it's going to change the monthly, quarterly, and annual as well as the BST and also the Lockheed Martin amounts. And we'll see if that took hold there. Let's see here. It sure did. So it did update it. So we went from 1,033.87 to 1,034.57 for the monthly, and then quarterly went from 3101.61 to 3103.72, and then the annual went from 12,406.44 to 12,414.88. Remember the 502.56. Let's see what it is now for BST. It's at 503.25. That's what it's going to pay in January if I don't buy more shares. You can see the last payment that paid me on the 24th of December. See how it's moving up, and it's going to be at 503.25 at least in January. So we'll delete that. And then let's take a look at the Lockheed Martin. Let's see if it even moved. It sure did move the needle from 534 to 538. So you can see what happens even with dividend drips and then the $100 deposit, how that keeps going up and up. Of course, Nvidia stayed the same because that 40 cents is just, well, it wasn't reinvesting because it wasn't enough to drip. So hopefully we'll get to the point where Nvidia can actually drip. So let's take that 1,034.57. We'll put that over to the monthly average dividend tracking tab. Get to the bottom, so it's 1034.57. So it added 70 cents more additional monthly income with that $100 deposit, and that's thanks to BST with that high over 8% dividend. And then of course Lockheed Martin, and then the extra 40 cents from Nvidia that went to BST. So that was a good nice change there, adding 70 cents of additional monthly income every month going forward to the portfolio. So let's go on to the Dividend Tracker tab. I've been doing these videos since January 2021. The portfolio value is $18,700, and I started tracking things closely and also started doing the videos. So it's been it's been 4 years since I've been doing this, and here's the dividends paid in that month. Let's scroll down to December 2024. Here is the portfolio value. You can see how we've dropped over $10,000 from November, but I'm not concerned at all because I'm buying things on sale now, and I'm not selling shares either. Even if I was living off my dividends, that's my intent or my strategy. Hopefully in a couple of years I'll just be able to draw dividends and not sell shares. Doesn't matter what the stock market's doing, as I'm just going to be pulling dividends. We can see here 268.7. Here are the dividends paid so far, and we're not done yet in December, already a record month. And then here are the 2024 quarter 4 results, and they're down because of SCHD paying twice in Q3, which gave an unusually high quarter-on-quarter increase. But take a look at the dividends. You can see just over the years. In the first year it was $659, and then went up to $2,800, then just over $10,000. Now we're over $11,500 for 2024. We'll see 2025 is going to be well over $12,000. Here is the average monthly dividend, and here is the monthly increase just with the dividend raises from SCHD, as well as adding deposits and then dividend drips. Look at the difference in December there, and there was a month-over-month gain in the monthly dividend income of 3.26%, and the annual dividends there at $12,414.88. And just in December alone, I increased the dividends, the annual dividends, by $391.84. We had a $100 deposit. This will close it out for 2024 at $1,900. So a little bit higher because I did a $1,000 deposit to kind of balance the portfolio a little bit. We can see the total dividends from January 2021 to now at $25,000, almost even, just over that, and which is incredible. You can see just how the portfolio has gone up, and then the dividends are doing, it's everything, it's really going exactly as planned, except for, a little bit of drop here. But who knows, 2025 we can get in the 250s, 240s, 230s, who knows. And that's fine with me, because I'm going to stay the course and keep investing and keep on dripping those dividends as well. And even with the market dropping, it doesn't affect your dividends, and that's why I really got into dividend investing. But of course, it is not my sole way of investing or my only strategy. I'll show you here in a minute with my total net worth where the rest of my money is invested. And before I started a dividend portfolio, I had a strong position in ETFs. So let me show you that. Over at Vanguard, I have an IRA over there, as well as it's a traditional IRA, as well as a Roth IRA and a taxable brokerage account. So over there at Vanguard, over $469,000, and they're all in boring ETFs with Vanguard. And then here's my current employer, this is my 401k. It's all in stocks. It's all in an S&P Fidelity fund over there. and just over $101,000. And then M1, I have another IRA, and you can see it's mostly in VU VTI with SCHD and BST, so some income play in there. And that total is at $697,000. And here is my dividend portfolio that I went into at length over at M1 at $269,000. And then over at M1, I have a 1-year emergency fund at 4%. And then at Synchrony, I have a 6-month emergency fund at 4.1%. I may move these funds over to Synchrony with a slightly better interest rate. And then over at Capital One, I have a 2-month emergency fund. Usually when I'm over $10,000, I'll move some over to Synchrony. And then here is the value of my home. I don't count cars or collectibles or anything like that. I have like musical instruments that are worth money, but to me it's just tracking too much. And most of them, like my car, it's a depreciating asset. It's dumb, and I'm also going to be driving anyway, so why even track it? And then here's my liabilities. I just sent over the money. I got a paycheck and I haven't put in here yet, and so I've pretty much wiped this out. So I scheduled that to pay, so I have to kind of update this a little bit and reflect the zero balance on this soon. So tomorrow I'll do that when actually takes effect. And here is the other liability I have, which is my outstanding mortgage balance at $176,600. So my total net worth, I was in the 1/8s for a little while, but with the market drop, I'm back in the 1/7s, but doing quite well. So you can see over in November 2022, I was at 1.2. And the reason why this went up so much is just because of my current holdings and the stock market going up, 20% over the last year. That's really what caused that. So when you have a lot of money invested, it moves more than you can even put into it. Of course, the inverse is true. When the market is dropping, you can see your net worth just go down precipitously, and it's not a good feeling, but you should just stay the course and keep investing. But here's the breakdown by stocks. Very heavily invested in stocks, home equity, and cash. I carry a pretty large cash position. We'll see if I continue to do so in the future. Here is pre-tax and after-tax. I know a lot of people don't even track this. Most people have their money wrapped up into their home equity as well as their 401k, and you really can't do that doesn't give you a whole lot of freedom to like take a gap year or something like that. But having this on hand, I could take a gap year or two with my expenses with this cash on hand. I probably won't do that, but I have the option to if I wanted to. Or, employment, my current employer may decide to cut ties with me, and maybe I have a hard time finding employment. So that cash cushion helps me sleep very well at night. Here's the breakdown between U.S. and international. And let me go over here real quick and just, you can see how I've tracked also my average monthly dividend. This is my dividend, so to speak, for everything. And I know a lot of people don't count like their IRAs and their 401ks as far as dividends, but they do pay a dividend. And I'm not old enough to have access yet to my IRA or 401k, but once I do have access, that's going to be in about 8 years. Then I will have this as a monthly average dividend where I could just draw this and not even sell a single share. And this does include the interest from my savings account. You can see that there, my savings too as well. But almost $3,500, and in 8 years, this is going to be a lot higher, and I won't have to, sell any shares at all. I'm going to be able to live quite well, because you can see here is what I'm spending right now, and I encourage everyone to track your current expenses, what you're spending. Let's just take a look at what I'm spending so I can get a gauge of what my life costs me, and we'll do just a quick average of that. So 4,500, if I can make 4,550 as far as income, and in 8 years, I'm sure this is going to go up. My expenses will go up as well, but as long as I'm investing and reinvesting those dividends for a little bit while longer, I'm sure that my current expenses, even 8 years from now, are going to be less than what this average monthly dividend is going to be. So that's all I had to show you guys for this video, and I'll show you again one more time. I am still here of what I bought, and that was BST. And I know this one's a little bit controversial. It's a covered call closed-end fund, and really the biggest knock on BST is the fees. The fees for BST are high at like 1%, but the return has been better than SCHD for me, and the income has just been incredible. So I bought an additional 2.74617 shares of BST. So let me know in the comments below what you're buying to close out 2024. And also, thanks everyone for watching these videos. I know you could be doing anything else in the world, and it means the world to me when you guys are watching these videos and also commenting. And so to help out the channel, just please click the like button. Also subscribe so you don't miss future videos. I'm going to go over all of my Vanguard dividends in my next video. It's an incredible amount of what I received in December, so we'll go over that. So thanks again everyone for sticking to the end of the video. I hope everyone has a great week.